Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be talking about my account overview and weekly portfolio for the 11th week of 2025. We're going to talk about the distribution received, what the account value looks like, even though it's on the screen right now, what I'm currently invested in, what am I invested out of, and then we're going to discuss, are we at the end of the bear market or could this potentially go down further? Without holding you guys up any further, let's get started. All right, currently my account is valued at that $75,406 mark. Over the last day period, it's up 10%, was kind of nice. Let's take a look over the last week period, because it doesn't say the whole story for just one day. Over the last week period, my account is down about $1,600, 2%. From the last two trading days, from Thursday and Friday, this is just an opinion piece. The market seemed to have stabilized a little bit, and I think the correction for the market might be over. But let's take a look at SPY in general to make that determination. SPY is one of my favorite funds to compare the market against because it is the S&P 500. And let's take a look. Over that last day period, yep, my account pretty much matched whatever the S&P 500 displayed at that 2%. But over that week period, let's see. Also down that 2%. So my account is very relatively similar to the S&P 500. That Thursday looks like it stabilized. And then Friday, which was yesterday, I definitely think we're kind of ahead in the right direction. We're stabilizing here. And then I'm thinking next week we might begin an upward momentum. I think over the last month period, market down 7% was a good enough correction. Over that 3-month period, roughly the same. This might be a sign of the bull market or the bear market being over, but it might be too early to tell. And I'm definitely not going to advertise that I have a crystal ball. But let's take a look at that 5-year mark. Let's kind of look at what happened during COVID too. So COVID was a weird time in our lives where the market was down consistently for like a 7th-month period. I think it hit its low in October. So roughly this, like January 2022 mark all the way down. So I don't know if we meet the same criteria. Obviously, there isn't a huge pandemic killing lots of people, but there could also be until we actually figure out, because definitely the market is producing these returns because of the uncertainty of the current administration, right? We don't know if the tariffs are going to help. We don't know if they're going to harm the economy. So everyone's kind of just being very bearish in general. I don't know how long it would take for everything to stabilize, right? I'm guessing that we had like 2 good trading days last, of the week of the last month period. Could that be it? I don't know. There's also a lot of room to go down because we look at what happened in COVID. Obviously, I'm saying it's not the same thing, but we had a downward trajectory for almost 7 months, October, almost 10 months. And the stock market lost, 40% in value, maybe 30% in value. Could that happen here? I don't know. I think, yes, there's a lot of uncertainty, but there isn't a global pandemic. Once companies are going to continue maintaining their earnings and there really isn't too much fuss going on, there isn't too much like backlash, I definitely think there's an argument that everything will stabilize. Yeah, those are just my 2 cents. Let's go back to my account and then talk about what I'm invested in and then what I sold out of. Is it 1 fund or 2 fund? We'll see. Okay, so what did I sell out of? I sold out of YMAG and ymax. So this is why I sold out of the 2 funds. When the market is good and very bullish, the YMAG funds are great. Even in a bull market, right? The fund went down, 30-something%. But then if you look at total return, I'm not a big fan of using total return as a good criteria. The fund was up, like if we talk about YMAX, 30%. And then YMAG was around that same number. In a bear market, for every 1% the S&P 500 was going down, the yieldmax funds were going down 3 to 4 times as much. So if what we just saw, the SPY went down 7%, my yieldmax holdings were going down 21 to 28%. Therefore, for me to sleep better at night and not having a such volatile account, I sold out of YMAX and YMAG. So I did take a loss on that. And if you look at the title of this thumbnail, I was like negative the couple $1,000. That's because I sold out at a loss. As I kind of mentioned here, I think we're turning the tide for the bear market. I don't have a crystal ball and don't know that. It can continue on for the next 10 months, right? Kind of what happened in COVID. The price to earning ratios were really high in January 2022. And then the market made a mass correction for 10 months. right? Obviously different circumstance, but the uncertainty for investors is high. And once we kind of, iron out the uncertainty, then I think the market's going to continue in an upward trajectory. Yep. So I got rid of ymax, got rid of ymag. I am still invested into nvdy. And the only reason why I'm still invested into nvdy over here is because I use those 1,500 shares to pay back my HELOC loan. And the HELOC loan is about $796 every single month. And for me, it's a no-brainer. I just take the premium and then pay back the HELOC loan and then a little bit extra as well. So that's kind of the thought process there. For rdte, xdte, still invested, somewhere between the 1,480 shares and 1,220. For jpq and jepq, I'm definitely planning on investing more of my actual cash into gpix and jepq. They're very stable funds. The share price doesn't appreciate or depreciate too much as compared to the yieldmax funds, and they pay a distribution of somewhere between 8 to 12%. I think a majority of my account is going to eventually be these funds, and then I'll just borrow against that core holding in the future. They'll have the kurv funds of amzp and goop. So let's go over to the spreadsheets. Let's dive into the weekly distributions. As you guys can see, for this last week, I'm negative $3,715.90. Right? If it wasn't for me selling out of ymax and ymag, I would be somewhere around the $1,400 mark, $1,500 mark in distributions, pretty much on par with all of my other distributions that were non-negative. If we go over to the account total, I subtracted the $18,000 or almost $19,000 of ymax and then the $20,000 of ymag. So currently the new account total is that $260,889 on the dot. As we can see, for 14 March, the fund is down about that $24,000 overall at $236,326.34. Moving on to xdte, the value, I bought about $58,700 of xdte back in December of last year. And currently the share price is at $55,696.73. From about February 14th, which is where I believe we kind of peaked for xdte, we've been on that slow downward trajectory because the markets were going down. But if you were to ask me, I just lost, $5,000 of ymax and ymag, but I have $60,000 of xdte, and the NAV erosion has been significantly less than that. So it was another reason why I wanted to get out of ymax and ymag. And soon, once I pay off this HELOC loan, probably all of yieldmax funds, is I don't like how much NAV erosion these funds have, and I'd rather just put it into xdte, rdte, gpix, jepq, and kurv funds. But yep, downward trajectory. Not what you want to see, but the market is the market. We just have to deal with it. From last week's distribution for xdte, I got paid out $296.11. This distribution has not reflected into the redistribution, so this number would actually be closer to almost 56,000. Just wanted to call that out. And pretty much for all of my distributions, they haven't been bought back yet because they're under my cost basis. Moving over to rdte, I had investment about $59,295. Currently at rdte is at $53,690.66. This fund has definitely taken a lot more of a beating than xdte, which, do I think rdte is on the chopping block right now? No, but you never know. I would have preferred this to be into xdte. I can maintain a nice distribution and not as much NAV erosion. I think xdte is like that middle ground go of share price not going down too much, but getting a consistent distribution. I highly recommend xdte in your investing plan. I don't like qdte. rdte is kind of in the middle here, but yeah, xdte is the GOAT in my opinion. I left the ymax value here just for this update. For next week, I'm probably going to remove this chart so we don't have to talk about it. For 14 March, sold out. And the week before that, we were at that $16,674.86 mark. The thing I didn't like about ymax added to the list is I initially, when I bought this, was back, I think like December, November timeframe, and the share price was at like $18. And when I sold out, the share price was somewhere near that $15, almost $14 mark. Just seeing how much that share price is going down. Yes, the actual, number wasn't too bad when I sold out. It was still bad, but just seeing the share price continue to go down, the distributions didn't seem to be affected that much, at least for ymax perspective. They all kind of just hovered around. I mean, the highest one was last week, which was kind of crazy. And then going to the ymax premium, no ymax premium. Ymag, sold out. Week prior was at that $17,230.66 mark. And now it's at zero. Ymag premium, no premium, because I sold out this week before the ex-dividend day hit and the record date. So no monies for me. For amzp, if we look at how much I invested about $40,000. Currently, it's at that $34,515.89. There is quite a bit of NAV deterioration from Amazon, but there's two reasons for this. Amazon hit like a 52-week high not so long ago, and there's going to be a correction from that. And add that to just the normal routine bear market right now, is the prices are going to take a hit. And same thing with the xdte and rdte distributions. The $688 hasn't been reinvested, so this number would be closer to about $35,000. Moving on to the distributions, like I said, it's that $688.60. If I can maybe zoom out a little bit, just to kind of show you guys a talking point here. As the share price continues to go down, the premium also goes down. When the fund was trading, all-time highs at this, like back in December, premium was $900, and I had less shares at the time. And then the next week, share price is going down a little bit further. The next month, share price is down even further. And then because of the whole bear market, share price down further, and then the distribution is lower. So that's how these funds operate. Going over the Goop, I did a $20,000 investment into Goop. Currently, the investment is, we'll zoom in so we don't destroy our eyes here, or at least my eyes, is the share, or the value is $18,591.50. No Goop distributions, but I should be getting it coming up in this next week. Okay, moving on to nvdy. The nvdy value, or my initial investment into nvdy, is that $33,884.55. And the current value for my nvdy shares is $26,235. Okay, so until I pay off the HELOC loan, I'm probably going to keep these nvdy shares because they do pay a relatively high distribution. And some people don't necessarily believe in there, or there's a cap to NVIDIA's potential, or NVIDIA. But my thing is the AI bull market is just beginning. People don't understand how much power is necessary to power the chipsets that are required for AI. That's why, like, over this past, couple of weeks, Amazon, Google, Microsoft, Oracle, they're all talking about spinning up nuclear reactors to power the sheer amount of power necessary to meet the demand of these new chipsets. With that being said, NVIDIA has a market advantage for this at this current time. People are always going to want the best chips for their money, and NVIDIA is that current leader. Don't get me wrong, TSMC makes decent chips, and China's trying to make decent chips for a lower rate. But the thing is, NVIDIA is still leading the market, and it has that competitive advantage. So therefore, that's why I'm still very bullish on NVIDIA and NVIDIA. And I'm going to be honest, if yieldmax didn't have NVIDIA, I probably would be totally out right now. I don't see anything I like in yieldmax. Maybe msty. I might do like a small little $5,000 position, but that's about it. But going to the NVIDIA premium, there was none this past week. Let's talk about the gpix value. How much money I invested was $28,043.97. It is only down about, $1,000, even though the market has been in a turmoil. So I like to see that. There was no distribution this past week, but for, a $28,000 investment, it's $187.67. And then JepQ, my investment was that $21,915.48. The current share or the current account value is $20,546.20. Throw another data point out there. Market going down, account value going down. It's just makes sense. Okay, and same thing for the JepQ premium was about $186.69 the week prior, but this week there is no premium. And that wraps up all the different data points. Hey, thanks for stopping by. Appreciate your views, likes, and comments. Right, till the next video, Matt out. Talk to you guys later.